But let's go now to the U.S. and speak with Steve Hanke, who's professor of applied economics at Johns Hopkins University. And Steve, let me just start by asking you, the drop we're seeing in the Rial, what's the main factors there? Is it internal? Is it external? Is it a combination?
It's a combination because historically you have to remember that the currency is very vulnerable and unstable. Since the revolution in 1979, the Rial has lost 99.91% of its value. So this is a real junk currency to begin with. Now, that's kind of the internal aspect in a way. The external aspect is the expectation that sanctions will be reimposed and the noose will tighten and the Iranians will not be able to sell as much oil as they have been selling. That will increase the fiscal deficit. And how do you finance a deficit? Well, you could increase taxes. That's not probably going to happen. That's unpopular. You could go to the bond market. Well, there is no international access to the bond market. And the internal one is all plugged up because the banks are loaded with a lot of bad debt anyway. So you go to the central bank and you tell them to turn on the printing press, and that's how you finance a deficit. And the Iranians are very smart. They know how this game works, and that's why they're dumping the Rial as they've been doing in the last few days.
Steve, do you think that U.S. sanctions, we are expecting to see another round of sanctions imposed even first off this Monday? Can they actually fully cripple the Iranian economy?
No. Sanctions do not work. The scholarly literature makes this very clear. Sanctions are basically for dummies. They entrench the regime that's targeted by the sanctions, point number one. And point number two, I mean, just think of World War II. There were all kinds of sanctions on Germany, as well as I don't know how many thousand bombing runs and everything else. And the economies are much more adaptable than most people think. I mean, the Germans kept on going.
All right, Steve,
the Iranians will too.
And Steve, I want us to talk a little bit about the oil, the price of oil, and how that could affect the Iranian economy going forward. Even some talk among some Iranian officials, they may try to disrupt the flow of oil from that region if the U.S. presses them too hard on sanctions on their own exports.
Well, absent the shutting of the Strait of Hormuz, which I think you were alluding to, I anticipate I have a very good, accurate method for forecasting oil prices, and oil prices are creeping up, and I have, by the end of the year, West Texas Intermediate crude at about $75 a barrel. That's a little higher than it is right now. So I think, again, there are lots of things that can happen in the market, but the fundamentals should put West Texas Intermediate about $75 a barrel by the end of the year. So prices are pretty firm, oil prices.
Steve, earlier before the break, you said sanctions don't work. Sanctions are for dummies. Well, that is what the U.S. is doing in reinstating sanctions on Iran. If the Trump administration is looking to pressure Iran into a better deal, to pressure them into anything, what should they be doing?
Well, I think the meeting that the president proposed with the leadership in Iran is the smart thing to do. I mean, you have to talk to them. The sanctions, we have a history of these sanctions. We have sanctions on Venezuela. We know that that's not working. We have sanctions on North Korea. That's not working. We have sanctions on Russia. They don't work. The history of sanctions, they just don't work. And that's why I'm adamantly opposed to sanctions of any kind in any place in the world. They're just for losers. They don't work. By the way, on inflation, I do have one thing that we haven't talked about. In the inflation, the official inflation rate in Iran is 10.2%. But today, I measure the annual inflation at 193%. That's quite a bit higher than the official rate, and that's one thing that really starts discrediting the regime when the official numbers are way different than what people on the street actually know. Now, for your viewers, one thing that's kind of interesting, the basis, the model I used to measure these high inflation rates, the insight for that, and originally it was produced in 1976 by Jacob Frankel, who, as you know, was a former governor of the central bank in Israel.
Yes. Steve.
So this is called purchasing power parity, and this is a very accurate way to get the number.